Everyone sufficiently caffeinated now? So this is a little bit like the Bunnings sausage question. Who puts the cream on and then the jam on their scone? And who puts the jam and then the cream? Can I have a show for cream first, then jam? Okay, and what about the rest of you? Are you kind of like jam first and then cream on top? Ah, interesting. Hands up if you're Victorian and put the cream on first. Okay, hands up if you're from Sydney and put the cream on first. Yeah, nothing conclusive out of that. I just thought I'd ask. Welcome back. I'm Simon Thompson, editor of Startup Daily and host of Startup Daily Show. If you are tuning in today at 2 p.m, the show is on ausbiz.com.au. I've got the intern doing it today, a bloke called David Kosh. We are talking about Morse Micro and the $140 million Series B raise. We're going to talk about getting more women in STEM, but of course you've got plenty on here, and you can of course always watch the show on catch up at ausbiz.com.au. That's enough about me, because we're going to talk about global trends through a local lens, a changing payment landscape. And I'm delighted to welcome this fabulous panel from ANZ Worldline Payment Solutions, Anne McDonald and Carl Walsh, to the stage, and to moderate it, a woman who tells me about the world and the nation all the time on a regular basis, Juanita Phillips from the ABC. Put your hands together, welcome them all. Thanks, guys.
Thanks so much for that, Simon. Good morning, everybody. It's fantastic to be back in Melbourne. It's actually the first time I've been here since the pandemic started, and I've just been reflecting actually on how so many things in our lives are really back to normal after those big changes of the last 3 years, but some things have changed, possibly permanently. And one of the big changes to have come out of the pandemic is the way that we pay for things. So, I mean, I don't know about you, but personally I don't carry cash in a wallet anymore. You know, I've got my smartwatch and my phone, and that's really how we conduct commerce these days. So there's been this massive acceleration in digital payments worldwide, and huge potential for even more growth in this area. On the other hand, we've also got all of these economic uncertainties going on, interest rates up again, inflation up, wages stagnant, we've got the war in Ukraine, we've got an energy crisis. So all of these different factors affecting consumers and businesses. So it is in this unusual and uncertain environment that a new payments company has launched in Australia, ANZ Worldline. As you can tell from the name, that is a partnership between one of our big four banks and the global payments leader Worldline. It's the new kid on the block. We're going to find out a bit more about it today, as well as chat more generally about the payments market, both locally and internationally. Joining me now is Anne McDonald. She is the Chief Market Officer for ANZ Worldline Payment Solutions, and Carl Walsh, the Chief Finance Officer. Welcome to you both.
Thank you.
Thank you.
Carl, I'm going to start with you. I want to get my head around what ANZ Worldline actually is. Now, it's not a bank and it's not a startup. How do you explain the company to someone new?
Sure. And this reminds me of going to Mass when I was young at home, where nobody sits up the front and everybody sits down the back. But anyway, the Catholics in the room will understand. So ANZ Worldline is effectively a merchant acquiring business. We have over 60,000 merchants now in Australia as we speak. We effectively enable those merchants to accept payments at point of sale and online. We serve really three segments: large enterprise, and SMB across the country. And effectively we charge those merchants, merchant service fee and terminal fee, and we provide services in store, but also for all their online business and all the backup support that they need to accept those payments and to do that, in a synchronized fashion. So in terms of what we are structurally, because I think people might be interested in that, because is that effectively we're a partnership. So Worldline has the majority share of 51%, and you can work out ANZ's share. And it is a partnership, and it's a very important partnership, which we'll talk a bit further as to why that's important. And in terms of why we're doing it and what it really represents on the ground, is we're combining that great merchant base that ANZ has, the fantastic and talented people that ANZ has, with Worldline's experience and expertise, new products, platform, and of course a lot of talented people coming from Europe, some of whom are in the room to help us out.
Okay, well, Worldline is Europe's #1 payments acquirer, so obviously it's a very different market over there. So why launch in Australia, and why Melbourne as your base?
Yeah, well, just in terms of the size, maybe to touch on that, so I'd said we'd over 60,000 merchants, which, I checked this with Anne, it's about 16% of market share, so that's pretty relevant and pretty important. And I think it's also important to say we want to put merchant acquiring into focus, whereas in some organizations it can often be maybe lower down the areas of focus. So locally, we're a major player already, which is tremendous. And in terms of where Australia sits, and I think this is very important, Australia is about 5% of the group revenue and about 7% of merchant services revenue, which is the biggest division of Worldline, just to put it into perspective. In terms of Worldline globally, and just to add to that, in terms of scale as well, we, by the end of the year, the calendar year, we'll have over 300 FTE in our business, which is a tremendous boost for the economy. And we'll have over 100 FTE in the support business, which is based in Australia, supporting that. So, we're very proud of that growth. In terms of Worldline as a global player, it's the #1 acquirer in Europe. Revenues last year, just to give you an idea, were 3.7 billion euro. It's been around for 45 years, not 45,000. It's got 20,000 employees worldwide and serves about 1.1 million merchants in Europe. So it's a big business. It really matters, and it's got a lot of size and scale in terms of its investment in tech all around the world. Now, you did also ask me why Melbourne in Australia. Would you want me to go to that one?
Yeah, just quickly. I mean, what a fabulous city, I have to say. So good. Good choice.
Yeah, well, look, in terms of Melbourne, it's pretty obvious. ANZ's HQ is in Melbourne. And the ANZ staff that have joined us and that were part of the original business are obviously predominantly in Melbourne. So there are obvious reasons. Melbourne is an emerging FinTech hub. It's incredible the growth in the FinTech industry here, as we see in these rooms today. But also I have to mention, and I know at least one representative is here, we've had tremendous support from the Victorian government, enthusiastic and genuine support in terms of their digital jobs program, their various analytics hubs in the north and west, and the introductions they've given us to the Commonwealth government to help us get people into the country, legally of course. In terms of Australia is a very sizable, can I say inverted commas, regulated market. It's a good place to start. It's effectively a gateway to Asia as well for the long term. And we found a very suitable partner. It really is, and we know this every day. We've got two great partners working together. Australian consumers are good early adopters in terms of crypto, digital wallets, online shopping. And the products that we'll bring from Europe, which Anne will speak to, are ripe for this market, which is really, really significant. And I know you want me to finish. The last thing that's really important, and you can't do anything without it, is there's great talent here. There's talent in the ANZ business, and there's great talent in the market. And if you have talent and you can get them aligned, you can do anything.
Okay, thanks for that, Carl. I am going to bring Anne in now, and you'll notice that Anne has a lovely Irish accent as well. I don't know, what is it about the Irish and the payments system? Is it you guys have gotten a monopoly or something?
It's just the government decided to lower tax rates, so now you have a lot of Irish FinTech expertise coming from the country.
Okay, all right. Well, Anne, Worldline has taken this approach internationally of partnering with banks, so clearly it works. First of all, why is that? And how does Australia compare with international markets on that approach?
Yeah, so I guess if you look at the European landscape, within Europe, for many years, the more traditional banks have outsourced their acquiring, and the reason for that is because of the fast-paced approach of, you need to keep up with consumer trends, you need to be able to bring technology quickly, and that is probably I guess, moves a little bit more agile in Europe, because there's so many different countries and different currencies that they have to keep up with. So, within Europe, you would have seen that trend where banks decided to partner with financial technology companies like Worldline. And within the last year, Worldline has partnered in Germany, in Italy, in Greece, 20 different banks in India, Worldline has partnered with to provide this service. So I guess for Worldline, it made a lot of sense when ANZ was looking for a similar type of partner to come to the country and bring that level of innovation that I guess we've brought to other banks across the globe.
Okay, I'm not sure who wants to take this question, but what have you learnt from the European experience that you'll bring to Australia?
I'm happy to kick off, but I'll be brief, Anne. I think, allied to what Anne has said, in all those countries, you learn a lot. When you're in partnership, it's a bit like marriage. There's peaks and troughs, and there's the good, the bad, and the ugly. Well, in most marriages, I think there are. And you get that. And they've learned, Worldline has learned a lot through that. And so in the negotiation process and in how we've commenced and how we're progressing, they're applying all those learnings. But I think significantly in terms of how they've built platforms, how they've migrated customers onto those Worldline platforms, in terms of how they've launched products, from those platforms, and how they've dealt with, customer segmentation and customer behavior in very large and sophisticated markets across Western Europe and now in Eastern Europe and, of course, Scandinavia. I think there's massive learnings that we will garner from that.
And look, I think what Worldline does particularly well and what they've learned, is to create that cookie cutter model of bringing innovation into a market in partnership with a bank. I guess Worldline invests 250 million euros a year in innovation, and for Australia, there's a further 22 million being invested to localize the European platform for the Australian market, which will be rolled out from September this year all the way out through to the end of next year. So I think that's an important learning as well, to really create that cookie cutter model approach and really stick to it and make sure that you really bring the innovation to market.
Well, with that focus on innovation, what can Australian merchants expect from this new company?
Well, look, there's a lot of exciting things coming to market, and it is kind of in line with some of the trends that we're seeing across the industry with COVID, I guess, happening, and the kind of fast forward button that pressed on the convergence of different channels, such as bringing together e-com and mobile experiences and really bringing that convenience to people and consumers. Really did make merchants sit back and think about what they needed to do to be able to compete and service their customers in a different way. So some of the things, I guess, that we will be able to look forward to is the mobile tap solution that Worldline will be bringing. We will be piloting from later this month. So that's basically turning an Android device into a terminal and allowing not only small customers but also large customers take payments via an Android-enabled device. So that's pretty exciting, and I think it will change how merchants leverage mobile capability to really bring payments to market. And the other one that's pretty cool, and we'll talk probably a little bit later, is the metaverse. So I think Carol mentioned that we are lucky to have a few people down from Europe that have actually moved from Europe, from Worldline Europe, down to Australia. And we have somebody in the audience today who's come down from Europe and has led a lot of our crypto and metaverse teams in Europe, who's also looking at doing that for us down here within the product team. So we have this month our Naked Life company that we're bringing, a merchant of ours that we're bringing into the metaverse. The metaverse being the next generation of the internet, and allowing people to immerse themselves in virtual reality and have a shopping experience in virtual reality. So we're setting up this merchant within the metaverse to allow them to have kind of a play and learn on how to evolve in that environment, and how to bring that shopping experience and to reach all of those customers in the metaverse that perhaps they have not reached previously.
I've been Googling the metaverse to try and get my head around that. I don't know if any of you here have done too much wandering around the metaverse, but from what I can gather, it's a bit like, going into the virtual world of a video game, yeah? It
is. And, I think some of the stats are, by 2028, 25% of people will spend an hour a day in a metaverse. So it's definitely on the rise. It's a big trend that's coming. You've got brands like Nike, Netflix, Coca-Cola, Louis Vuitton that are really putting their money on the metaverse. So it's an interesting one for Worldline. Worldline has a dedicated team in Paris on the metaverse because it's a big piece that's coming and some of one of the trends that's coming down the line. So it's important for us to be aware of that and to try and bring our merchants on the journey as well and give them an opportunity to play and learn as we play and learn in that environment.
Yeah, and as well as the merchants, it's obviously a lot to do with consumer behaviour, and that has really changed over the past 3 years as a result of COVID. I mean, it's really supercharged this whole new world where contactless payment and that sort of thing. And this is your kind of area. Give us an idea of how things have changed because of COVID in the way that people live, work, and shop, and how that impacts on your business.
Yeah, I guess we're all aware of what COVID has done to the way that we interact as a society, and the way that we do the way we go about our everyday lives is different to what it was 2 or 3 years ago. So I guess people who would have always gone to the grocery store because they wanted to touch and feel the products, now get their groceries delivered online or they order them for click and collect, or people are very used to now taking their dog for a walk and ordering their coffee on an app and then walking by the takeaway window and just grabbing it, because within COVID they had to move to a self-service model. So I guess with COVID it's been quite interesting, and for me it's been quite interesting to watch how it's really accelerated those omni-channel, I guess, experiences where consumers are starting to merge, traditional bricks and mortar and in-store shopping experiences, as well as mobile and in-app experiences, and then of course e-com, and how they're all kind of converging into one. So that's been quite an interesting trend to watch, and for us now we see coming out of the pandemic a decline in e-com, and not necessarily a decline overall, because the growth versus pre-COVID is still quite significant. But it's starting to level off a little bit now. So it's about 15% down year on year from June this year. And that's more around, coming back out where people are continuing to use mobile and in-app and e-com experiences for convenience, but not necessarily because they have to. But I think what it's really showing is that there's no returning back to the norm of what happened pre-COVID. Behaviours have changed, and it will settle back to. It won't be as extreme as it was in COVID era, but what we're seeing basically is the continued convergence, and that is kind of here to stay, because consumers want a choice in how they interact with their retail outlets.
Yeah, it is interesting how originally the driver was safety concerns, and now it is purely and simply convenience. Carl, do you think that is a permanent change?
Well, yes, I do. But I mean, I think that there's also been, interestingly, a bit of a rebound as well. Like, a large part of our portfolio is focused on point of sale, and we've seen certain verticals in our portfolio actually strengthen. I'll say post-COVID, if I could say we're post-COVID, and we're seeing the same in Europe. Businesses that are where the portfolios are heavily focused on retail and point of sale. Have actually been growing year on year and rebounding really, really strongly. We've seen that in some of our larger businesses, particularly in Western Europe, which is really positive. And then, as you've probably seen, some of the valuations of online businesses have dropped to tanked. So, these things do come in cycles, but I think in terms of behavior, consumer behavior and merchant behavior, we are seeing a permanent change for sure.
Okay, I want to move on to the other side of the coin, which is the economy. worldwide facing all sorts of headwinds, particularly bad in Europe and the UK, especially with very high inflation and the energy crisis, the war in Ukraine. Here in Australia, of course, we've just had another interest rate rise. We've got worker shortages, the list goes on. Carl, how does all of this affect the digital payments market, and are we in a better position here to weather the storm than Europe?
Yeah, well, if I knew the answer to that question, I wouldn't be in this job. I'd be probably day trader. But more seriously, it's interesting in terms of the macroeconomic impact this year. So what we're seeing, as I just said earlier, is actually a lot of our Western European businesses flying year on year. The rebound post-COVID, the particular verticals they're in, because last year was so poor, obviously the growth rates are some of them extraordinary. But what we are beginning to see now as we head into H2, where we're right in H2, second half, is that inflation and higher energy prices and costs are really biting. So when you look at the forecast to the end of the year and into the following year, you can see that impacting already. So that's really, really challenging, and we wouldn't be alone in that. And the UK, well, it's a particular basket case because they've exited Europe, but they'll need to sort that out themselves. In terms of Australia, Australia is interesting. Look, do I think that it can weather the storm better than Europe? I think so. Only primarily based on one thing. An example is having gone through the GFC here. Australia did better, a lot better than a lot of European countries and the US, obviously, because the fundamentals were pretty strong. None of the banks were doing anything too crazy or weird, in terms of products and activity, although one or two might have been. And the federal government responded, probably split in the room whether that people agreed with that, but they did, and they responded quickly, and it worked. In terms of currently, I think that inflation is projected to be much lower here next year than in Europe, and I actually believe that it will be lower. But that wouldn't be that hard because European inflation will be more than double digit. But I think the fact of the matter is that continuing interest rate rises, and everybody knows this in the room, and energy costs going up are going to bite. And they're going to bite, in the last quarter, and they're going to bite in 2023. So I think that the federal government actually is going to have to play a prominent role here, like it did back in 2008, to support consumers and to support businesses. Whether people are like it or not, I think they're going to have to.
And I want to ask you about, I know it's a guessing game, how a consumer is going to behave over the next 12 months, but those points that Carl raises are really interesting, that there are sort of conflicting signals coming. Your business relies on people spending money, and at this point they still are. And then you've got other data which shows that confidence is going down. The property market, amazingly, seems to be still holding up. There's not been a widespread crash. Speculate a bit for us. How do you think consumers are going to respond over the next 12 months?
Well, I guess your point that we know that consumers have been spending, I guess looking at the data, consumer spending within the household has increased 10% year on year, and that's the 16th consecutive month where it has had increases. So that's pretty, that's pretty interesting information and good for us, I guess, from that perspective. To your point on the consumer confidence, obviously with the interest rate rises, there is an interesting conversation around consumer confidence, and it's something that we talk about a lot as well coming into the Christmas period, like how will it weather the storm? I think there is, from my perspective, I think there is probably money still within households because of the COVID era and because people didn't travel and because of the, economic impacts that have happened over the past couple of years. And I think that will benefit going into the next few months. I do feel people will be a little bit more conservative than what they would have been, but in my opinion at least, I don't think it will have, that much of a material impact on the overall spend. I guess that's my view, but perhaps you have a different one.
people have still got a bit of that buffer of COVID savings, right? So that may well carry them through the interest rate rises. I guess that's what you're hoping will happen too. But Carl, what about the merchants who are using the digital payment systems? What are the challenges facing them?
Yeah, well, I mean, across our portfolio and across all our segments, I mean, they're suffering the challenges that people are reading about and people in this room are actually facing themselves. So talent shortages is a massive issue. A third of our portfolio are facing an issue in terms of finding the right staff at the right time. Inflationary pressures, which we discussed, are hitting them in all sorts of ways. And we're even seeing this as a business when our vendors and suppliers come and speak to us, and when we look at what we've got to project for next year. So we feel that as well as our merchants. Supply chain disruption, over 41% of our portfolios is got some sort of a challenge there. And that's been going for nigh on 3 years now. And it's affecting people dramatically still. And I would add a few other things, and I think that absenteeism to a degree, and maybe lower productivity. I don't want to sound like some sort of right-wing politician, but I think all those things are to some degree impacting merchants as well in the mix. And I think the thing to touch on what Anne was saying as well, they are worried about consumer spending actually dropping off. They're very worried about that in H2 and into 2023. And I think our more, maybe off the macro, I think our more sophisticated customers are actually, because they're under pressure and there's lots of different challenges, they're really interested in solutions, not just relationship and price.
We saw at the Jobs and Skills Summit last week a rise in skilled migration. Do you think that will help the merchants with that worker shortage?
Yeah, absolutely. I mean, the sooner the better. You go back 20 years and the 457 visa was incredibly successful. Oh, we're okay, we're back. Yeah, so I'm a huge advocate for that.
Okay. Now, Anne, this is something I want you to know about Anne. She's been working in this space for 20 years, and I'm fascinated by this because I was trying to think of what was the payments technology that we had 20 years ago, and all I can think of is that the old manual credit card machines. Yeah. I want to talk to you now about opportunities in this challenging time, and a lot of it is going to be about innovation and technology. How much has technology changed in your time in the industry, and what do you think the opportunities are now in your sector?
Well, look, I guess that when I started in payments, chip was just being rolled out to terminals, so you didn't have to enter chip and PIN. It didn't exist at the time, and they were just rolling it out. And e-com was the kind of Apple still of everybody's eye, and everybody was like, this is the new bricks and mortar, and it's going to replace everything that there is. All in stores is doomed, and obviously that didn't necessarily happen. I think, like I mentioned earlier, what really has happened is you see the strength of bricks and mortar really maintain, but really being bolstered by e-com and in-app experiences. And some of the other things, I guess, that's really changed in that time is around the protection for consumers and also the protection around data. So PCI compliance also was just being born when I started in payments, and of course that's the security standards for somebody who's not a payments person. But everybody else surely will know PCI compliance in this room. So obviously that's come out and put a lot of protection in, and then you've got all of the various different data standards that have been rolled out, which gives a lot of consumer protection, and that goes right through to, I guess, authentication as well around the chip obviously and PIN, but then also coming into 3D Secure and version 2, and how people authenticate and manage that security and data in these different environments. And I guess that you continue to see trends of new technologies coming, and it's always driven by consumer behaviour, right? So all of those things that I just spoke about are all driven by consumer behaviour, and we continue to see that, right? So I spoke about the metaverse and you know what we're doing there and the trends. So that's a specific opportunity, I think, for companies in the next 12 to 18 months to really, you know, figure out what's happening there, get in as a front foot, understand, you know, work with somebody like Worldline who's able to give them an opportunity to play and you know, get out there and figure out what's happening. So I think that's quite an interesting opportunity coming. The other one, I guess, that I would be remiss to talk about, and something that's been developing particularly over many years, is open banking or account-to-account payments. You know, and you see in Europe when Sept was brought to market there's been quite a considerable shift around, you know, how to do payments and manage that within the European landscape. I think, you know, is it fully buttoned up within Australia, and, you know, is there a lot more maturity to be brought there until we're fully ready as a country to embrace account-to-account payments? You know, in my opinion, I think so. But it's definitely something that's coming in the next 12 to 18 months, and I think it's going to be a very interesting disruptor in our market, in the industry that we're in, and certainly for us as payments companies, but also for merchants and consumers.
Carl, do you want to talk about any of the cutting edge technologies that we can expect over the next few years? Maybe you can even tell us a little bit more about the metaverse. Like, how do we buy a pair of running shoes?
I think Anne would be much better placed actually to speak about the technology, so I'll hand it to her.
You'll leave it to her. Well, all right. So Anne, I just briefly, because I'm interested in this, explain how the metaverse works for a consumer. If I want to buy a pair of running shoes from Nike, what's the experience like?
Yeah, well, I guess if we go back to what Worldline is doing, it's probably similar to what Nike is doing. Worldline has opened up a showroom and soon to be shopping mall, because we found across the globe so much interest from our merchants in participating. And so once a month we bring a merchant on to kind of showcase them in our virtual room, where they can put up products in the metaverse, and then people who are in Decentraland can visit the Worldline showroom, similar to like a Nike room, and then they can try the different products. They can within the immersive experience in the virtual reality, and then they can purchase them. Now, depending on where you are in the country, in the world, you know, in Switzerland with Worldline, you can pay for that with cryptocurrency, and you can also pay with normal fiat currency. Within Australia, it'll be normal fiat currency right now, as we haven't yet moved into that crypto side. But that's basically it's an immersive, I guess, e-commerce experience.
How long before cryptocurrencies become mainstream, do you think, here in Australia?
You know, I think it's quite an interesting one, and I think it's definitely one that we need to be mindful of. So looking at some statistics, 55% of merchants and consumers in Australia want to be able to use cryptocurrency to buy goods and services. And Australia is actually ranked 4th out of 26 countries for interest in crypto. So I think it's definitely one that we need to be able to look at how do we enable our merchants to take cryptocurrency, and that's something that we've done in Switzerland, and you know the guys here are part of the team of enabling that in Switzerland, where they enabled 85,000 merchants across Switzerland to accept cryptocurrency. So I think that's quite an interesting one for us to look at, and something that we'll be looking at within, you know, ensuring we have the proper regulatory framework to support it.
Okay, now Simon has given me the big wind-up. Thank you, Simon. So unfortunately, we're going to have to wrap it up soon, but I do want to get some final thoughts from both of you. Carl, what are your priorities for ANZ Worldline?
Yeah, so, I mean, number one is finish recruiting, you know, to finish our target operating model this year. Really, really important. Particularly for the new year. Move to the new platform, as Anne mentioned earlier, is absolutely vital, and launch the new products. And if we do those three, when we do those three things, not if, when we do those three things, we're going to retain customers, which is a lot easier than getting new ones, and very profitable. It's a bit old-fashioned, but it's true. It'll drive double-digit growth and magnificent free cash flow, which will keep everybody happy in Paris.
Okay, thanks, Carl. And your top 3 priorities?
So similar to Carl, I guess, but looking at it more from a market and consumer perspective, I guess number one is definitely to bring the innovation in the Worldline platform to Australia, and we're starting to pilot that in September with commercial launch in March. The second one is our customers, as it has to be. We've got big customers and small customers, 62,000 of them, in fact, and bringing all of that innovation to those customers is going to be actually very exciting for us, and I think quite a treat over the course. Something that is definitely new in my 20-year career. And the third one, which is probably extremely important, I guess we've spoken a lot about partnerships. It's important for us as a payments company to realise that we're not alone in the ecosystem. To realise the consumer innovation that for our merchants that we want to. There are partners that sit behind and in front of the payments that we facilitate. And so what we really want to go out to market with is a partnership approach where we bring those partners along on the journey with us in that ecosystem and see what we can deliver for our merchants.
Anne and Carl, it's been great to talk to you today. I wish you all the best with the new venture, and might run into you in the metaverse one day shopping for shoes.
Maybe.
Please thank our panellists, Anne and Carl from ANZ Worldline.
Thank you to Juanita, Carl and Anne. Juanita, you probably remember when Mark Scott got big into SimCity or whatever that virtual world was. I think it's kind of that all over again. There was a virtual ABC up for a while back in the good old days. When I was coming down here from Sydney, I was looking for my MyKey card, and it sits in a drawer by the front, and I found the checkbook. And I remembered the last time I wrote a cheque, it was actually used as a deposit on a house back in October 2019. And it's sat in the drawer ever since. I wonder if we'll ever use them again. Guys, thank you so much. Please clap them as they come off the stage. It is amazing what we take for granted nowadays. Even how payments just work. On your phone, it's extraordinary. And do I need my MyKey card, or can I tap on just with my phone down here, like you can in New South Wales nowadays? No, you need the MyKey card. Okay, cool. Thank you for that piece of advice. I'd now like to welcome our next panel to the stage. We're going to talk about cross-pollination across the FinTech industry, a bit of beekeeping in the finance space, with Shadi Haddad from Till Payments. Shadi, great to have you here, and thank you for sponsoring Intersekt as well with Till. Anne-Marie Crook from Australian Payments Plus, Mike Boyd from Slip, and our moderator for this is Malia Fauna from EY. Guys, come on up. Put your hands together, give them a clap. Oh, no, we're going to do it after the start of lunch. And while they're getting settled in, the national accounts dropped for the June quarter, and I just thought I'd read out some of this from the Treasurer, Jim Chalmers. We're going to hear from Assistant Treasurer and the Minister for Finance, Stephen Jones, just after lunch when we come back in. He's got a message for Intersekt, which we're going to play to you. But today's national accounts, and this is what the Minister says, the Treasurer says, reflect an economy rebounding from the disruption of the pandemic, but held back by capacity constraints, skill shortages and declining real wages. Discussion that we just had, and a theme that I think will continue. In the 2 months since the end of the June quarter, we've seen a deteriorating global growth outlook, continuing labour shortages, rising interest rates, which are straining businesses and households and creating headwinds for our economy in the year ahead. Real GDP increased by 0.9% over the June quarter and was 3.6% higher over the year to June. This result is due to solid growth in household spending and exports. So well done, although no doubt that's why the RBA is putting up interest rates to try and pull back on some of that spending and get inflation into its target range. He goes on to say consumption increased by 2.2%, contributing 1.1 percentage points to real GDP growth as spending on services continued to rebound following the disruption of the pandemic. Goes on, exports were solid, especially mining and agriculture have picked up. Service exports also grew off the back of more tourists and students arriving in Australia. Long way to go. I'm sure our panel will talk about the possibilities there. So please put your hands together as we talk cross-pollination in the FinTech industry. Thank you.
Thank you, Simon, and many opportunities and cross-pollination just in that national account statement just been released. So thank you for sharing the breaking news, as always, Simon, even at Intersekt today. It's my great pleasure to be sharing the stage today with Shadi, Anne-Marie and Peter in lieu of Mike from Sept today, as he has had an operation and Peter is standing in today, so thank you very much. It is a topic that's dear to my heart. Partnerships certainly, I know we all know, in a personal sense or in a professional sense, can have many ups and many downs, and really importantly in this ecosystem, accelerate growth. And we're going to hear some amazing stories and war stories about that today as well from our panellists. We'll just do a few short introductions in case you've not read the brief online, but can I first introduce Shadi to introduce himself. Before we do that, I'll quickly introduce myself. Malia Fauna, I'm a partner at EY, an EY startup and entrepreneurship leader, and have the great privilege of working with FinTech Australia since its very early beginnings when we were still having to define what is a FinTech. Can you imagine? I'm sure you can all remember those days. Long gone are those days, but it's so fantastic to see so many people here. But over to you. Please introduce yourself.
Thanks, Malia. Shadi Haddad, co-founder and CEO, incredibly humbled to be sponsoring FinTech Australia and to be here at the Intersekt Festival. So really looking forward to getting out there and amongst everybody.
Hi, I'm Anne-Marie Crook. I'm from Australian Payments Plus, and I lead up what we call our propositions and ecosystem development. Complicated title, happy to explain at another point.
Thanks, Anne-Marie.
And I'm Peter Tully. I lead business development at Slip. For those who don't know, Slip's building out a network, two-sided network, so lots of collaboration to be covering today.
Absolutely. And if we think about collaboration more broadly, 6 years ago, when we talked about collaboration in fintechs, it was a bit about the unbundling of banks and the services that banks provide. And now what we're seeing is more the partnering, not just between the incumbents, but really interestingly, partnerships between fintechs and perhaps some other industries as well. Shadi, can I put the first question to you, please? When we think about that change, particularly over the last 5 or 6 years, or I know Till's been around for over a decade now, can you talk about what you think has motivated that evolution of change, where you were once competitors and now we're working together?
Yeah, I think, great question. I think what's changed over the last 5 years, a lot of people didn't know who Till was. We've been around for a decade. We're the overnight FinTech success story. And our growth is being fueled by partnerships. I think it's really core to our business model. It's 90% of our business. I think what's changed in the last 5 years is that fintechs have realised that they can't be perfect at everything and they can't solve every problem. But if you can put really good pointed solutions together and provide a really unique, simplified customer experience, that the sum of those parts is incredibly valuable and that the merchant and the consumer get the benefits of that solution. So I think, the acknowledgement that you can't do everything perfectly yourself and that there are partners out there that are really good at doing their part of the puzzle.
And just picking up on that point a bit further, so there's, the statement was, there's some partnerships that work really well. I'm going to move this question to you, Peter. When we think about the types of partnerships that are out there that we see fintechs and banks working together on, do you have a view on what partnerships work best?
Yeah, absolutely. It's really about aligning the priorities among the partners that you are going to be partnering with, ensuring that upfront you're very clear about what your objectives are, and building the network internally at some of these partners to be able to make it a very successful collaboration. That can happen both internally, so you can be setting that as expectations internally amongst your teams, and then how you approach and you build out that go-to-market plan with the individual partners is just going to be critical to not just getting to the starting line, but the carrying on through of that.
It's an interesting point. There's so many different ways we can partner. And when we were speaking to Anne-Marie as part of the briefing session for this, I'm sure many of you know Australian Payments Plus. But what surprised me was the depth and the breadth of Australian Payments Plus when we think about partnerships. Anne-Marie, can you speak a bit about APP Plus and more specifically how the different businesses in Australian Payments Plus actually partner with each other and think about that from a group perspective?
Sure. So Australian Payments Plus came about towards the end of last year and basically is the combination of the biggest domestic payments infrastructure. So brands that you'll all be familiar with like FPOS, MPP, BPay, as well as the Plus in AP Plus, which is the digital side of our business. So things like digital identity, mobile wallet. So many of you would have heard of Beam It, which has now been rebranded to Beam. But we're exploring things like expanding wallet as a service in addition to QR payments. So we came together, and I think the real intention behind AP Plus was to create an open payments ecosystem. And I guess, not to be dramatic in any way, but I think the thing that keeps us up at night is the fact that big tech is increasingly coming into the payments value chain. And with big tech comes closed payments ecosystem. So we see our role as really driving growth in Australia and partnering across the ecosystem to make sure that we generate economic growth, that we keep jobs in Australia, and also that we're offering the best customer experience based on our partnerships with FinTechs. From an internal perspective, I think we're still moving on the journey. As you can imagine, with any transformation, when you're bringing together very different businesses with very different cultures, but I think we're unified around our kind of purpose, and our purpose is to unite people and technologies to power better experiences. And I think we see that by bringing together teams to focus on customer needs and having that customer at the center, we're able to bring those different parts of the business together. And I think we've got a really exciting road ahead of us, not without its challenges, but I think we can do some good.
It's an incredible example of partnership on a quite global scale. I'm super excited to see what happens with Australian Payments Plus, given the kind of companies that collaboration is happening with. We all know them, BPay, FPOS. As we also know, having collaboration partnerships, there can be a lot of trouble with negotiating those deals, the nuances in the clauses, and how that actually works from a market's perspective. Shadi, have you got any examples of where that's not worked well? So examples where there's actually been some challenges, because we're talking about a lot of positivity with partnerships and accelerating growth, and that's fantastic. But what about where you've had some lessons learned?
Yeah, another great question. I think when, sort of back to my point earlier, the strength of a partnership is knowing where the boundaries are and of the capability. And I think what sometimes you see is partnerships where each party tries to go into sort of the other party's experience or the other party's, lines. And what happens is the responsibility gets blurred and the solution gets blurred, and the customer is the one that suffers, incredibly in that scenario. So, and it's really important because, again, the strength in that partnership is those lines of demarcation.
Anything else to add from Anne-Marie or Peter on particular, the challenges and what your lessons learned?
Yeah, what's really unique about Slip is that in this two-sided network that we're building, it's not just partnerships with financial institutions. We're also building out partnerships with the major retailers in Australia. So as a tiny FinTech, getting squeezed between the largest Australian corporations, both banks and non-banks, is trying to build that collaboration and actually being that conduit for a conversation to be happening between, again, your example of we're live with NAB and Chemist Warehouse, to actually bring those parties together and having them start to work together and have them understand each other's businesses. One example is that, again, to Shadi's point around the technology and really defining that up front, we've had a partner who wanted to build the smart receipt experience. So that's a receipt. It's your proper proof of purchase within their banking app. And they wanted to build it custom for their own banking experience. But then you turn around to Chemist Warehouse and you say, you have tens of thousands of frontline staff. And you're going to need to educate them on a receipt experience that is different with this bank relative to other banks. And so that, again, going back to the core of the talk, it's around collaboration and trying to get these parties together to actually understand some of the challenges in the core parts of each other's businesses has been a hurdle that we had to get over.
And an opportunity as well. So what I love with that story and what I can see with all three of these companies that they've done is it's about collaboration, not just within fintechs or with incumbents. It's actually thinking much more broadly now into the retail space, and that's where the opportunity lies, right, doesn't it, to create a more fulsome customer success or customer experience across that whole journey together. And yes, there's going to be challenges, but the more that we can collaborate together, there's actually opportunities within it. And I think that retail example is a fantastic one. And I mean, you know, Sept should be really proud of the fact that they've actually partnered with all four of the big banks in Australia, which is a fantastic feat in itself. So congratulations on that in itself. I guess on that theme of opportunity comes innovation. And collaboration and innovation can go hand in hand, and I'd like to just put a question to the panel around how you see the intersection between innovation and collaboration and some examples around that. Who wants to take the question first?
I guess I can kick
Thanks,
it off.
Anne-Marie.
So I think for us, we're in a very privileged position of having access across that network. So Peter spoke to retailers, financial institutions. We have access, I think, to that entire Australian ecosystem. And I see part of our role in bringing together those fintechs with our member partners and with the broader ecosystem as well. I think what we've come to realize is that through collaboration, we get the best of both worlds in the sense of, from a selfish perspective, you can fill capability gaps that you don't have, you have a quicker go-to-market. But from the reverse kind of flip side, we're able to provide fintechs with a platform and access to people that they may not have had access otherwise. So I think it's a two-sided coin and it's beneficial for both parties. And I think, you know, we talk about the success of fintechs within Australia means more economic growth and more overall growth as well.
Excellent, thank you. And Shadi, I'm going to redirect that question in a bit of a different way to yourself, because Shadi's the COO and co-founder of Till, but he's got a technical background. So I'd be really interested to hear your views on that intersection between innovation and also collaboration.
I think the payments industry in itself has gone through tremendous change. We saw the entrance of Square, Toast, Shopify, these huge, fast-growing fintechs that were focused on providing one solution that covered running the business of the end merchant, solving the consumer experience, and then putting it all together and taking a payment. On the other side, you had a bunch of buy now, pay later firms, emerging fintechs, new ways to pay, the emergence of QR payments, self-service. The pandemic fueled a change in the way we took payments. And right in the middle were companies like us going, we can either be a barrier to the enablement of that innovation, or we can be a bit more flexible and a bit more agile. And what we've found is that a level of agility towards being able to bring companies together to solve for that end requirement, which is ubiquitous payments, regardless of where it comes from, is a really fine balance. And so we built a business model that essentially said, you know, if someone wants to become like a Square, they can use the payment rails that we provide to provide that proposition. If somebody wants to accept, you know, any form of payment, they can come to us and we provide the rails to do that as well. And I think the really important point is that if you stay true to what you're trying to deliver and you don't build bespoke, so you focus on providing uniformity across the innovation stack, you can start to see that the use of your technology can be applied and shifted and shaped in any way it needs to be.
Fascinating, the intersection of innovation and collaboration and the importance of innovation and how it's it can have a different definition to different people, and sometimes it's, you know, it's blue sky innovation, sometimes it's incremental innovation is what I heard you just talking about, which is equally just and important and creates so much different opportunities across the ecosystem. Peter, I know you've worked in a few different places around the world, and we've seen, as we're talking about, an evolution of cross-pollination of fintechs and partnerships and collaboration, particularly over the last 5 years in Australia. But we've still got a way to go as well. How do you compare the Australian maturity of partnership and collaboration to what you may have seen in other global markets?
It's a great question. I think we've seen it accelerate pretty dramatically in the last couple of years. Again, to the earlier question of just realizing that collaboration actually creates a 1 + 1 = 3 outcome for all the participants in that collaborative pool. And that's what we've tried to do, is partnering with all of the big four banks in order to change payments. There's one part of the payments experience today that is still analog. A piece of paper, you stand there at the till, and a piece of paper prints out. And yes, there are tools to re-digitize that, but the fact that that hasn't been digitized when you can pay with your watch is just mind-numbing. And so that's where we've set out, is not just to do that here, but also to do that globally. And you then add on top of that the environmental impact that actually comes from paper receipts. Many don't know that actually they're covered in toxins that can be cancer-causing. So be careful when you touch paper receipts. And so it's kind of a win for us in building out this network that does create a win on merchant sides, win on bank sides. I don't believe in any other market it would be as possible as it is here, due to both the banks and merchants leaning into this as an opportunity, as well as the consolidation, which is really unique in Australia.
Yeah, excellent. And Shadi, what's your viewpoint on that? You know, Australia compared to the rest of the world, you know, Till's operating in multiple jurisdictions around the world, so you're living and breathing this at the moment?
Yeah, we absolutely are. I think partnerships in Australia are still very much in their infancy. If you sort of look across the ditch to the US, the partnership ecosystem in payments is pretty well defined. You know, you've got a bank that's typically the sponsor acquirer, you've got a processor, you've got a POS gateway, you've got an e-commerce gateway, you've got the solution provider, and then you've got the customer. And so everyone tends to know that that is kind of the ecosystem. There are some disruptors that go, I want to do all of it, or 90% of it. And so you see they're kind of the outliers, and they're your Squares, your Shopifys, your Toasts, those sorts of guys. Coming back to Australia, you know, we're only just starting to see the green shoots of software companies going and understanding that the combination of solutions, whether it's software, payments, services together, is actually okay and is actually a bit more beneficial than trying to protect the customer footprint and only get a smaller piece of that pie. And what we're really seeing here is that every ISV, every software company is starting to go, I've got quite a large customer base, I've got a fixed SaaS revenue. You know, chasing more SaaS revenue is a lot harder than going back to my existing customer base and unlocking payments revenue or services revenue, value-added services revenue. And so the green shoots I'm talking about is that every software company now is looking to partner, you know, and 2 years ago when you were knocking on the door of a POS company going, hey, we want to sell payments to your customers, they were like, that's my customer. We do all the work, we install them, we look after them, you know, we take the calls when they're frustrated with the banks. Why should we open the door to our customers? So that mindset in the last 2 years has shifted significantly, and you know, if we look at our growth over the last 18 months, it's fueled purely by that change in behaviour.
And of course, I know we've all heard, you know, the pandemic's almost accelerated that because everything has moved, absolutely doubled down on digitalisation, and the customer has also accelerated the acceptance of digitalisation. And you're right, Peter. You know, why do we still have all these paper mechanisms, including receipts and other aspects? And to Simon's point, his question around MyKey in Melbourne, I'm sure we all have some frustrations with MyKey in Melbourne, and compared to Opal in Sydney, but let's not get into that. Where I want to move to now is Shadi, you've just alluded to some frustrations with working in partnership and collaboration with the incumbents and the big banks. And I'm going to move this question to Peter. Can you talk about the practicality of managing some of those partnerships with the incumbents or the big banks or even bigger organisations where you've got different speeds, different systems you need to work within? Can you share some examples and tips around that?
Yeah, it's not easy. I think as everyone on the stage would attest, it has its challenges at time. I think it goes back to my earlier point is setting clear goals up front is critical. Setting those targets so you know how you're performing as both parties coming together. Secondly, it's about networking internally at that bank, because as we know, lots of folks move within banks, and working up to a senior level so that as you hit those speed bumps, you have the ability to escalate and potentially navigate around where that speed bump might be. But the second piece of that, it was just as important, is internally within the teams, making sure that the internal teams who's joined a startup, expecting to move up startup pace, but if you're dependent on traditional banks' pace to success of your company, it's just ensuring that your internal teams realize, and you actually can create little mini wins. So yes, the finish line, or the starting line really, of your partnership may be down the road, but the ability to actually have some small wins along the way that may not seem major or may not be a reason to celebrate at a big company. But again, when you're really churning away the midnight oil, it's those mini wins that keep the team going.
I might jump in there. I think really important points made there as well. I think what we're seeing as well is every partnership wants to have some level of customization, some level of uniqueness. I think the importance of defining a clear framework that is standard, that allows you to get some wins along the way, and then some hurdles to hit together before you then jump into a fully blown, customised, bespoke partnership, are really important parts of partnering, because everybody wants to do everything custom, and there's no way to scale a business when you do it that way. But if you put some hurdles in place and you get some wins along the way, it's much easier to invest the time and the resource to be able to customise and make a solution unique for that particular base.
And the other thing I just heard in both of those examples was, by getting some wins on the board, you're actually developing some trust in that relationship on the capability, and probably a personal level as well, which will help accelerate and smooth out some of those inevitable bumps in that partnership. And Anne-Marie, from a different perspective, in industry collaborations, any examples you've got about managing those practical realities, and how Australian Payment Plus, who's been doing that more recently, has been able to adjust at the different speeds and operating models?
So I think I spoke earlier about the kind of cross-functional working teams, and I think, we sit down with our customers or members up front, establish what their needs are, map out how our solutions can meet those expectations. And I think, to Shadi's point, it's then setting clear stage gates for how you can move through this development. So as a specific example, at the moment we're building out our QR payments capabilities, and it's a journey, right? And there are different capabilities that we will need to build along the way. So part of it is managing expectations up front of what we can do today, and also sort of showing that future state and what is possible, a year or 2 years out. So I think it's that combination between having those stage gates and those regular milestones, and also having that balance of, managing expectations and being realistic about where you are today and where you can be in future.
Excellent tips. I guess building on that theme, Shadi, can you talk about how Till runs that partner-led model, and how you actually support your partners in building out their own value proposition?
So we set out to, actually, for people that don't know, we started as a payment gateway. We're omni-channel. We used to sit in front of the banks and acquirers and provide a solution to software companies, equipment manufacturers, and their customers. Fast forward 5 years under that model, and the common denominator was the software company and Till Payments providing an omni-channel service, and behind us was a set of acquirers that we were swapping and changing at the request of the merchant. And that was because the enablement component of being able to provide outcomes for their businesses was really driven by the technology stack and the software company that we were working with at the time. Having become an end-to-end provider, having become a merchant acquirer, what we've seen is that if you can do the really hard stuff but make it really simple, then the uptake is incredibly fast. And what we've seen is that, to some of the points, you can't do everything yourself before you're ready to do them. One of the things we had to do was partner with an FBOSS member, build our volume, and become an FBOSS member. right? And those hurdles and those gates taught us that we need to do the same with our partners. You know, if we can't just walk up and start with a walk-up start, you know, to get a membership or become an acquirer, you know, pledge collateral, have, you know, strict AML compliance, underwriting regimes, then the partner should have those same hurdles. And if you create those frameworks early and you understand, you know, that some partners will be able to do it and others won't, and for the ones that don't know how to do it, you can provide a solution for that, then, you know, it's a really simple way. So the proposition, you know, for us is we provide our platform under a white label, payments as a service. Everything from origination through to settlement, right? And I think that's really important to note because there are lots of people that sit behind us, a lot of partners that sit behind us to enable that, you know, and that's really, really core to what we do.
The art of keeping it simple is often not simple, as we all know, but incredibly important and powerful, isn't it? We're going to, on this topic of cross-pollination across fintechs, I mean, that's almost the heart of what we're doing here at Intersekt as well. It's a theme across this entire event today and being able to cross-pollinate and share ideas and meet each other together. And I want to finish this panel with a question for each of you to finish on what's your one takeaway, one piece of advice that you'd like to leave everyone on how best summarise it all, because we've had a lot of tips, but your one piece of advice you want everyone to leave the room with on how best to collaborate with either incumbents and or other fintechs. Who wants to kick off? Go on, Anne-Marie.
Okay, I'll do that. I need a second to think about it. I think in terms of collaborating with fintechs in the most efficient way, I think for us it's having those conversations and keeping across what's happening in the market. So it's a very fast-paced, dynamic environment, always changing. So I think for us we have a responsibility to make sure that we're continuing those conversations and connecting with fintechs across the ecosystem.
So you'll be able to do that lot today and tomorrow.
I'm looking forward to it.
Absolutely. And Peter?
So I think when we think about collaboration, it's about bringing two parties together to partner to achieve an outcome. And for us, you're going to work again through the night to get you to that partner launch. You're going to go live, but that's not the finish line. Is seeing that as the starting line. And the ability to grow that relationship going forward is just so much more critical than actually getting you there, because you could go there and it's just crickets. And so the ability to actually nurture that and build upon that, it's kind of like any good relationship, making sure to focus on it to make sure it can actually achieve and continue to hit goals.
And Shadi, your one key piece of advice?
The partnership is a journey, and you need to understand your limits within that partnership, and you need to evolve across the partnership for it to be successful.
And I think we could apply that both professionally in our professional lives and also our personal lives as well, across partnerships and relationships in all its forms. Excellent advice. Please put your hands together and thank Shadi, Anne-Marie and Peter for their insights. And I'm sure they'd be happy to connect with any of you throughout the Intersekt or elsewhere. Thank you so much for joining us today. Thank you everyone for joining us.
And a big thank you to Malia as well from EY. Well, guys, you've earned lunch, but we are going to make it a quick one. We're going to kick off on time at 1 p.m. when we're going to hear from the Assistant Treasurer and Minister of Financial Services, Stephen Jones. And then we're going to dig into a key government initiative, the Consumer Data Right. See you at 1. Enjoy the break. And thank you to K&L Gates for sponsoring.